Okay, so hello everyone, welcome to this video breakdown where I'm going to be breaking down your study sell trade that I took yesterday, and I promised I was going to do an explanation, a breakdown actually, of how and why I took that trade because I mentioned that I saw a classic retail pattern that I traded, and the reaction was actually nice. So first off, you guys actually saw me forecast sell moves on your study. If you actually went through my market breakdown video, and so for the free channel, actually, I did a video prior. I think it was around last week Tuesday, explaining that we're gonna see sell moves on your study. But for my private team, I actually went and told them when I was gonna take this trade setup. Okay, so I'm going to show you guys real quick why and how I was able to use multiple confirmation to confirm this price action. As you guys know, I've taught you guys so many setups as regards to our retail trades and all that. So first off, the first thing you need to understand is the correlation between DXY and US30. So if DXY is bullish, US30 is going to be bearish. If DXY is bearish, US30 obviously is going to be bullish. So there is kind of like an inverse correlation between DXY and US30. Now, last week we are looking for bullish prices on the DXY, and so we were. If we're looking for bullish prices on the DXY, then that's going to translate to bearish prices on US30. Now, we said we're expecting the XY to get to 97.70, and we could see sell moves from around that level. And you can see that we're very precise from that because we called bullish on the DXY from around this level, my team, and I said we could look for sells on DXY at 97.70. Okay, and you can see again the precision, right? You can see how precise we are every single time, every single time. And I mentioned that if we were able to find that sell move, we're going to take out this level first. So you can see how we're calling highs and lows on DXY. That in and of itself is an artwork. Okay, that is a masterpiece. So we're still looking for bullish prices. I think around that time, DXY was still below the zone. So we're looking for price to trade to an higher time frame level where we could see an unfolding of shorts on the DXY. So if we're looking for bullish prices, I wanted to see that align with US30. Right, so that was what I actually forecasted. Initially a sell move, then a bullish move. So it's simply just looking for multiple confirmations in price action. So I wanted to see your steady at my higher time frame level when the XR was around this level. I was expecting retracement from. You can see that we've seen bullishness of that level. Currently, we're up about almost 500 pips from the buys around this level. I'm going to explain now why your study was bullish. So now, when you have situations whereby you're looking for bullish prices on DXY, you're looking for confirming market structure to you want to confirm your bias that you're actually correct on your analysis on your study. Because sometimes you can have bullish DXY and you can still have bullish US study, right? You know, when conditions go south, you can have situations whereby US study will be bullish and DXY also will be bullish. So you want to confirm that market structure is confirming the correlation between DXY and US study. So if DXY is making higher highs on the daily time frame, you want to see your study make lower lows on a daily time frame. So that opposite correlation, right? So if you simply look at your study, right, so let's first look at the market structure. So first off, if you followed the channel again from last month, I said yesterday there was gonna be profit taken around this level, which was what we saw. We saw profit taking on your study around this level. So there was profit taking on yesterday around this level, and you can see subsequently as price poked through that level, we saw that massive drop on your study. So that was a nice piece of analysis. And where were we heading for? I want you guys to pay attention to this. Remember, for some of you guys on the free channel who've gone through the SMT course, you're gonna hear me talk about ranges, and you're gonna hear me talk about central bank price action inside of ranges, right? So you can see that prior to the expansion, there was a range, right? You can see that stock run where there's this X sign prior to the expansion. So that tells you central banks bought inside of this range because now you can see the subsequent expansion from inside of this range. So central banks bought price inside of this range. So now if you're going back down, where they're going to reach for? They're going to reach for this range, right, to unfold more buys if this was a legitimate buy from the central banks or the institutions, okay? Now, what is the key confirming price action in this? You can see that there is a prior swing low before this other block, and there's also a fair value gap in this. Okay, and if you don't teach high probability order blocks, this is a classic high probability order blocks, meaning this has highest probability to play out of any setup you're going to find in the marketplace. This is the best setup you can ever get. Okay, so we've seen a very high probability setup on US 30. We have a swing low, and also again, what I teach people or what I teach my students is the banks, not the central banks now, the banks and the hedge funds take trades and manage trades based off the daily time frame. So if you're taking note, this is a note taking movement right now. Okay, the banks manage trades based off daily time frames. So if you're going to trade your stop losses will be trade below daily swing points, right? And this is a daily swing low, so obviously there's going to be trailing institutional liquidity below the swing low, and you can see just an order block with a fair value gap. So guess what Price did? Price came here, acted like he was going to trade another swing low, and then swept through. And if you guys saw my Instagram story last week, you saw me buy US 30 from this low. Okay, you're gonna see me buy US 30 around this low. So you saw many of you guys. No, not actually that. I think it was here. Sorry, excuse me. Okay, yeah. So some of you saw me buy US 30 below this equal lows, and some of you people were asking me why are you buying US 30 below equal lows? Because what you want to do is you want to look at the market from the perspective of the central banks. If the central banks are going to go bullish, they need the necessary sell side liquidity to pair with their bullish orders. Where are they going to get that sell side liquidity from? Daily levels, the funds, the institutions. So what will they do? They'll drive price. IPD is going to drive price to levels where the fund surpluses are resting, fund liquidity is resting. Then the central bank floor traders. Okay, I'm giving you the insights now into how price moves. The central bank's floor traders will then pair up central bank buying with institutional with hedge fund selling and the small bank selling. So you're pairing orders with the opposite side of the marketplace. That is why I was buying below this low. And you can see that subsequent explosion in price. Okay, subsequent explosion in price. Now, why we're able to get the sell move? Because if you look at this price structure, okay, I'm getting to the meat of this call now. If you look at this price structure from this low all the way up to this high, where did they sell into? Because you're looking for that bullish breaker. So where was the last selling of the institutions into this liquidity pool? Because they need to mitigate that selling with buying. Okay, so this is where they sold. They sold inside of this last bullish candle prior to the down. Okay, so this is where we're looking for mitigation of any selling once price breaks above this level. Now you can see that price is just stalling around this level, and the very big clue was this equal lows. There was equal lows around this level, equal lows, equal lows. So what do you think Richard is going to look at this as? We're just going to look at this as support. Because remember, what classic retail teaches you is once you have two levels in price, that is support. So Richard's going to look at this as support. And then guess what? If DXY, if we're looking for bullish prices on the DXY, we're looking for confirmations that US 30 is going to be bullish. Sorry, bearish, excuse me. So we're looking for necessary confirmations. So the first confirmation was equal lows. Okay, next confirmation now is the trend lines. Trend line, guys. Okay, remember I teach you guys about trend lines. Okay, the trend lines. So now this is what we call classic market maker trend line trap. ICT calls this a Trendline Phantom. I call this a Trendline trap. Okay, so what's gonna happen is if price wants to be bearish, you're gonna see price respect trend lines. Okay, respect the trend lines. So you can see one touch, two, three, four. So at this last touch, it's gonna be heavy. This third to the fourth touch, okay, which is what again when I got my early stages into my trading career, this is where I was taught in price action. When price gets your trend line the third time or your fourth time, that is when you want to be going all in. That's what I was taught from the academy and all that stuff. Okay, so this is what retail is gonna do. Retail is gonna be heavy very, very heavy inside of the third and the fourth touch. Okay, so that is what retail is gonna do. So retail now, they're gonna look to trade the stop losses once price breaks market structure. So where is our highs? Here. Now you're gonna see price respect these highs, especially if those there's some people trying to sell this market. So there's gonna be some people also still trying to sell this market. So what the central bank or what IPO will do is something we call neutralizing open flow. So you're gonna neutralize open flow on either side of the marketplace. If they want to go bearish, you're gonna neutralize all the sellers first. So once you've neutralized the sellers, then you're then gonna push the market down to then take out the buyers. So what is the open flow in the marketplace? That is what IPD is going to want to seek. Right. So we know higher time frame open flow. We know the higher time frame open flow rests below equal lows. Okay. So and we know eventually you're going to seek higher time frame open flow below equal lows. Right. So before they drive prices lower, they need to take out the sellers first. Right. And you can see 1, 2, 3 touches. So once price is breaking out of this zone, then you know that retail is looking at this as a breakout because just again another style of trading trend line pattern is retail would not necessarily buy at the trend line. They'll wait for a breakout of what they feel is a resistance level, then they buy the breakout. So retail is buying the breakout of this apparently resistance level. So once price breaks out, retail is buying that. So what I simply did was wait for that breaker in price. So we know inside of this last down candle, that was where the last buying took place. So it's gonna be heavy retail buying inside of this last candle. And we know our target obviously is gonna be this zone, which was where the third or the fourth trend line came in place. So that's gonna be our first target. Then a second target will be this zone. Then lastly, you're gonna see this higher time frame zone where we're looking for bullish prices on US 30. So you can see 1, 2, 3, 4 touches, higher prices, price breaks, retail resistance, confirmation for retail breakout buying. As retail is buying, price drops immediately. So what you want to be doing as an institutional trader is you're looking to pair up retail buying with sell entries. You're looking for selling, right? So once you get that deep back, if you're too scared to take the sales, which is going to be very risky, trying to sell above this high. Once you get that breakdown below this breakout, then you're going to what? You're going to look to sell. Because remember, the last down candle prior to the up move is your mitigation block. So you're going to sell inside of this zone. Okay, so you're looking to sell inside the zone, then your stop loss goes above this high. Right, so my trade position was something like this. Right, this was my trade entry. I was using about 136 pips as my stop loss, and then my TP was here. TP was around this level, excuse me. So it was like a nearly 5 risk to reward. So it was a 5 risk to reward. I was basically scalping the market, so it was basically like a 5 risk to reward, right? So again, stop loss went above this high because this is the way you trade breaker in price. And I was looking for price to first take out this level and then go all the way down to this level in line with a bullish DXY. Okay, so once that came, that was what I utilized in taking trades. So again, what I'm teaching you guys is you always want to do the opposite of what retail is doing. So you want to buy below old lows, you want to sell above old highs. Initially, that could seem very scary to you, but you're gonna get used to this eventually, and you're gonna find trading really, really easy as you're going to see very explosive moves in price. And just a quick update for our trade today. Currently, now we're up 455 pips. Okay, we're up 455 pips on US 30. So wonderful day. Thank you guys for being a part of this call. Okay, yeah. So one more thing, I said I was going to show you guys entries to back up what I was saying. So I think I sent the picture to my. All right, so you guys can see this. So you can see my entry on US 30. Again, you can see me selling at the breaker, which is this last down candle that I mentioned on the live. So you can see me precisely at that breaker. Sold, stop loss above. Right. So once we went down below this, the third and fourth touch of the trend line, what I said retail was going to sell. Okay, sorry, buy. That was where I sold again, right? So once we got here, I sold. Once we got to this low, I sold once more. Then once we took the second touch trend line, I sold once more. Then I think you can see. Let me actually try to exit this. How would you exit this? Okay, cool. So I think you can see the results of this. It was pretty much almost 5-5. It's cool. I'm just showing you guys the results of the trade. And I took partial profits. I left very small portions run. And I just got stopped out with the buy on US30. So you can see how easy trading is if you don't overcomplicate things and you take everything pretty much easy. So again, thank you all for going through this video. I'll see you guys next time. Trade safe.